Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets behind every announcement, and today we're diving into some stock splitting news that might just shrink your share count, but hopefully not your portfolio's value. Get ready, because we're about to break down what it means when a company decides to make a big change to its stock and what to watch out for. In this report, we're looking at an interesting update from BiomX Inc, a company that develops treatments for microbiome related conditions. They filed an 8K report, which is basically a public announcement for big company news. The key event here revolves around a significant change they are making to their stock structure. This isn't about making more money directly, but rather how the existing stock is divided. BiomX's common stock is traded on the NYSE American under the ticker symbol PHG. This is the very stock we're talking about. This section essentially tells us that the change we're about to discuss affects the rights of people who own the company's stock. It is pointing us to another section for the full details of what exactly this modification means for shareholders. This is where the real meat of the announcement is. BiomX is making an amendment to its core governing document, which is like the company's rulebook, and the reason why is a big one for shareholders. So the shareholders have already agreed to this. The company's board of directors was given the power to do a reverse stock split. Think of it like this. Instead of a pizza being cut into many small slices, they're going to put those slices back together to make fewer, but larger slices. This means fewer shares will exist overall. The board has decided to go with a pretty aggressive 1-for-19 split. This means for every 19 shares you owned before, you will now own just one. Mark your calendars for November 25th. That is when this change officially kicks in. Your shares will be adjusted and trading will continue on a new basis from that day forward. Let's be clear here. If you had 95 shares before, after this split, you'll have only 5 new shares. The total value of your investment should, in theory, remain the same right after the split, but the number of shares you hold will drastically decrease. This is a technical detail. A CUSIP number is like a unique ID for a stock. So the new shares will get a new identification number. This is important for smaller shareholders. If your share count isn't perfectly divisible by 19, you won't get left with a fraction of a share. Instead, they've put a mechanism in place to round you up to the next whole share, which is a shareholder-friendly move. This isn't just about the common stock you hold directly. Any other financial instruments tied to the company's stock, like options, warrants, or preferred stock, will also have their numbers adjusted similarly. This ensures fairness across all types of holdings. If you still hold physical stock certificates, you'll need to exchange them. The company's transfer agent will guide you through that process. But if your shares are held electronically, like in a brokerage account, you don't need to do anything. Everything will be updated automatically on your end. Now, this part is standard legal stuff. Companies include these forward-looking statements to talk about their future plans and expectations. It is a way for them to discuss potential outcomes of their strategies without guaranteeing them. It's a legal shield. This section just lists the supporting documents attached to this report, like the actual legal document that makes the stock split official. This is the legal document that actually details the reverse stock split. It is the official paperwork that makes the split happen. This is an electronic data file for analysts and systems that track company performance. It helps computers read and understand the filing. And here we have the signature of the authorized person signing off on this report, putting the official stamp on these changes. Here we see Marina Wolfson, the Chief Financial Officer, has signed this. This indicates she is confirming the accuracy and completeness of this report on behalf of BiomX Incorporated. So, why would a company do this? Often, companies implement a reverse stock split when their stock price has fallen significantly. A very low stock price can make a company look less stable and might even prevent it from being traded on major stock exchanges, which often have minimum price requirements. By reducing the number of shares, the price per S-share goes up. This can make the stock more attractive to institutional investors and potentially improve its perception in the market. However, it is crucial to understand that a reverse stock split on its own does not create any new value for the company. It is like cutting a pie into fewer pieces. The pie itself hasn't gotten any bigger. The real test for BiomX will be whether they can execute their business strategy and deliver actual results that drive the stock price up organically. Not just through a cosmetic change. The risk here is that if the underlying business performance doesn't improve, the stock price could continue to decline even after the split, potentially leading to another split down the road, which can be a sign of ongoing struggles for investors. It is a signal to look very closely at the company's future prospects and its ability to generate revenue and profits. In conclusion, BiomX is making a strategic move with this 1-for-19 reverse stock split, aiming to boost its stock's perceived value and potentially meet exchange listing requirements. While it is a necessary step for many companies in such situations, it is not a magic bullet the company's long term success will depend on its innovation in the microbiome space and its ability to translate that into financial success for its shareholders. What is your take on this reverse stock split? Do you think it is a smart move for BiomX or a sign of weakness? Let us know your thoughts in the comments below if you found this breakdown helpful. Do give this video a thumbs up and subscribe for more in-depth corporate analyses. Also, don't miss out on our growing community. Join us on Discord. The link is in the description. Thanks for watching, and we'll see you in the next decode.